No, they don't make mistakes, but you know, you put something in front of them they can't deal with. So once they get into the back end of your site, you know, firewalls you have to have, of course, and you know, clicking that button makes a difference. Okay, the markets getting kind of boring. And I guess this is what you call winding the spring, in the sense of, you know, as they consolidate, they're only going to do that for so long, and then they're going to break one way or the other. And as we've talked about several times this week, let me get my drawing thing out here. Now this is just the S&Ps, the futures, but as long as they stay in the lower half of that big red bar, the assumption is it's going down. So just looking at yesterday, you know, it looked like it was ready. It did go down, and then it was able to regroup. And, you know, now it's back up against some resistance here. And we shall see if it can crack this range here. So as far as the S&Ps go, you want to keep an eye on this 2790-ish level thereabouts, or taking a look at the spiders. For those of you that don't have the futures, you know, the daily chart isn't showing the pre-market price action, but just look at this 278 level thereabouts. And there is a little, that shelf down here, but if it starts to break this, it's highly unlikely this is going to hold. And so I'm not saying that it can't. I'm just saying it's highly unlikely, because once you have this reversal pattern and the consolidation at the bottom of the red bar, and if it could break down here, then odds are it's coming down here. There's an unfilled gap to be aware of. You got the converging 200 and the 50 in that area. So it's an area. So we don't know exactly where it'll stop. And you just can't. And too many try to pinpoint exact spots with their proprietary numbers and all of that BS. But, you know, somewhere in there, buyers are going to show up. If this was to break this low and waterfall down into there, and by waterfall, I mean intraday, a continuous drop down there, which would get kind of climactic, which would be the best thing to get a bounce, of course. If it breaks here, again, that doesn't mean it'll go down there today, but that part of the process of what we do is to monitor how it forms, falls, the lack thereof. We'll monitor the ticks to see, NYSE ticks to see how much power there is behind the selling and so on. So step by step. Now, the other side of the scenario is if this holds and gets above this level here at 282, well, odds are we're off to the races to retest this high. Now, that would seem to be the less likely scenario, just based on this negative pattern right here. But stranger things have happened, and we're going to monitor to see which way it goes. As always, the prior day's high is our first resistance. The prior day's low is our first support. And the range expanded yesterday versus the prior 2 days. A little bit further to go, and it's right in the middle. Right, it closed below its open, and it's in the middle of the range as to where it closed. So, you know, it's got to run about an equal distance to the high or the low. So, again, making it right, neutral at the moment. You know, waiting to see which way it breaks, one way or the other. Qs, right? Well, this broke below that low a couple of days ago. It held at the 20. More bearish pattern, but it's in an uptrend. You know, so this we talked about a couple of weeks ago, how this ran up, Then there was that Thursday day where it ran higher, and which suggested maybe it could do the blow off top up to the old highs. Didn't happen. Got the nasty day last Friday. And the last 3 days have been kind of like trying to go down, but buyers are stepping up here and defending this area. Now we'll see what they can do today. And here's the chopping around here, pre-market, neutral again. We'll wait to see, And just looking at this, you can see the head and shoulders type of top in this 170, 675 area or thereabouts. A crack of that opens up the door to way below. So be aware. If you can get down below this level, if it gets up here, well, then we have to think something else. But set an alert. You may not be watching it if it happens. The Russell, which was the weakest, was actually showing some relative strength yesterday. Not really a big deal versus the drop on the daily chart, but intraday it was showing some relative strength, and now it's just kind of sitting here flat, dead in the water. And transports had a good day. Boeing, I guess there was some news. I didn't really look to see what it was, but it looked like it was going to roll over, and then it just blasted to the upside there. And I'm sure institutions are trying to desperately hold it above that 200 MA, because if it breaks, some of them, I'm sure, have their automatic sells in to say, you know what, let's just exit this and revisit it if it can regain the 200. And if it breaks below there, there's really little to stop it from going down. So far, it's holding. It's got a bottoming tail bar. Pre-market here, it's up a little bit. And you can see the weekly, of the gap down and the stabilization here. See the overlapping opens and closes right there. So it's right in that support. It's one of the concepts from Master Trader Technical Strategies. If you look at a time frame where the opens and closes are clustered, and you drop to a smaller time frame, you're going to see a base. That's why we focus on this little cluster of opens and closes there, because we know it's a base in a smaller time frame and where buyers are going to step up. And then we see how many of them step up. How do we know? By the reaction. Right? So far, they've been stepping up. They haven't been doing it aggressively. Well, maybe so on big down days, but when I say they're not doing it aggressively, is they're really not making any headway as of yet. If they can get above, say, this topping tail, right, which is the middle of this range here. We got not really a pivot based on 3 lower highs to the left and right, but in this instance, I think that is a pretty good line in the sand to pay attention to, as far as whether it can get above there or not. All right, so if you're following Boeing, that 380 level, if it gets above there, it could make a quick pop up to 390. And the futures, the NQs, there's flip-flopping, inside day here so far. Not much going on, more neutral stuff. There's the Dow with its lower high and its higher low so far. And, let's hope this week doesn't go out with just a flip-flop back and forth here, because that's going to be pretty boring. We want to get some price movement, some volatility, and things popping one way or the other. But so far, it's staying in the bottom half there, which is suggestive that it can go down, and it's caught between that level and this one down here where buyers are stepping up. So at some point, somebody has to give up, right? The buy side or the sell side, and we'll see which way it breaks, one way or the other. The extent of where it went, look at the run up, the wide range bar, suggesting the end of the move, and up near resistance, topping tail there. So a little bit more bearish pattern here, or kind of consolidation, but it needs to break the low or break the high. And then we have, a signal, something that happened that says, hey, prices are going to go in one direction or the other direction. Bonds down a little bit, but broke out of this range here. This is not good for the stock market. Well, the stock market's holding up. As bond futures are going higher, yields are going down. Yield curves of different maturities are beginning to invert. And historically, that is going to bring a recession, which seems, how could we have a recession when we got the strongest economy ever in the history of America? Well, maybe things are too good. I'm not sure. Right? Or maybe something is not as what it appears to be. I'm not sure. But the markets are telling us that, trouble is coming for the stock market. And that could take months. But without it even happening, last September, October, the market took a nosedive, based on a slowing economy. And then the Fed backed off. So something to keep in mind. That's why gold. Oh, look at gold. I kind of gave it up there. So many mixed messages going on here. The gold miners were looking so good the other day. And so they stalled yesterday. They're diving here pre-market. And Mr. Schizophrenic, this market just, I tell you, if you're not on your game here with your trading plan and your money management, you are going to get your clock cleaned in this market. As benign as it may seem at times, it's just out there lurking, ready to whack you. So this is, it stops getting hit because this was grinding higher like it was going to take off to the upside. Yeah, so silver going down, and it certainly looks like it's going lower. All right, so here's the same concept: wide range more down, staying in the lower half, and there's the crack. So same concepts that we talk about related to equities apply to futures. They apply to Forex if you're trading it. The concepts are universal to everything. And that's what makes it, I say makes it, but what I would say makes it that you know it to be true, because no matter where you look at it, it's applicable versus some of these esoteric types of analysis. Oh, this is for the Forex market. This is for this market, the oil market, or this and that. No. Our method, apply it to whatever you can put on a chart, and it works. And oil, pulling back here, maybe an M top, see if it can crack these lows. So here at support, we'll see if some buyers begin to step up, which I guess they have. There's some stabilization there. And just looking here, equity markets are still holding green, but no big deal here. So going to be a neutral open, and we'll see which way it goes here after the first 5, 15, or 30 minutes, see how long it takes to decide which way it's going to go. And just looking at what's up and what's down here. Facebook down 263-ish, just flip-flopping around there. Microsoft doing nothing. AMD, I don't know, was on the list here, but was coming down into this little area where buyers should show up. It had this breakout a couple of weeks ago. There's lots of things that look good. There's things that look pretty bad. And, stick to the plan. If you don't like the way it looks, doesn't meet your trading plan, stay the hell away from it. Good morning, Michael. All yours, Dan.
All right, good morning. Thanks.
Dan, take a look at Lulu when you get a sec.
Yep, I got it right here.
Okay.
Yeah, earnings that in 5, and I looked at the expected move. Just I like looking at that to see what the market expected and whether the short option sellers are getting clocked. And it was like expected move of like 1280, and it's up 22 now. So the people who sell options thinking that they're overpriced in the earnings, they work many times, but this is the price you pay when they don't work. You're, getting clocked on the short side. Gapping up to 168 and change. Wow. Wow, look, it's off the chart on my weekly. It's gapping to all-time highs. Look at this base that it came out of. Wow, after a little breakdown failure. Wow. So gap's excessive, nothing I can do about it. Hey, Greg, Michael, whoever else, if you can put your drop down to all panelists and attendees. Greg's new to the room, so I just had to remind him. Spiders here, we have a call spread, and I tighten the stop. Over this, I said the tighter break even or 281.52. And it's holding so far. The bulls, this 15-minute pattern, the bulls are in control. And why do I say that? Sellers were in control, 50% retracement, little breakdown failure here pre-market, back up, sideways, building support. That's so far. The bulls are controlling that. CGC. We had a put spread and we legged into a condor and we stopped out of the put spread, I think on that tail day. So on Monday, so we still have the call spread. Cron, we're short stock. Tilray, short stock. Those are in the pot cannabis sector. And next week, by the way, we're doing our MT live on a trading cannabis sector. IYT call spread. Roku short stock with a tightened lowered stop. CAT put spread for Friday, and we also gave one yesterday for next week. THS, that trail stop yesterday at a gain. RSG, let's see, I think we trail stopped. Starbucks, we have a covered call that expires this Friday. Facebook's going to be a problem child today. We're going to have to keep an eye on him because we have a put spread that expires next week, the 162.50s. So my inclination is on the little bounce. We got to leg into a condor if we get juice. EHTH is over. Well, it kind of got sloppy, but the entry was over Tuesday's high and it did not trigger. We were going to sell $50 puts way the heck down here. ALK, it's a nasty crack on the monthly. Papa Mike, we are short stock and short a call spread. We covered a third into this weakness right into MT live. I think I did it at 86.15, right near the low. That was perfect. Same with our Tilray, right here into noon. Covered a third at 63.75. HCC, we bought yesterday. We bought stock on a gap breakout. Walmart, I have this on my list for a short today. Dollar Tree was showing strength yesterday, but it's It's sloppy here pre-market, gapping down. AEO, we found an MT live strength on the weekly, but we need a pullback. CPRT, over the highs, I like it. M-chip, we shorted a call spread yesterday. That looks great. Square, I'm watching, maybe for a call spread. PFGC, just watching. I like the weekly there. And GG was strong yesterday, but with the gold selling off here pre-market, you see the stock selling off too. All right, let's look at some gap plays now. LUV is not a gap play, but there was an article in the journal today that said they lowered their earnings estimates. And since the newspaper is old news, right? That means they did it yesterday. Look what the bar did. So that's telling me it was already priced in. And in fact, somebody in our Facebook group just posted something that I just saw a few minutes ago. And I didn't even read it, but he posted a news item saying, oh, this has to be horrible news for Boeing. And I said, well, guess what? It's gapping up today. So whatever horrible news that you think penetrated from that event is already priced in. So I'm watching this, you know, as we trade up or down. Facebook, I mentioned that we got a J&J was in the news that they lost some lawsuit. However, look at the weekly. Over the high, that looks great. WBC getting whacked, and I had looked up to see if this was earnings, and it's not. So I don't know what the news is, but this was a very bullish pattern. Daily, weekly, and that's just a risk. Oh, trader, they settled, didn't lose, okay. And then I don't care either way, trader, in terms of how I trade news and the pattern. Whatever the news was, it's out. And if it takes out yesterday's high, it looks good. What was I saying? That this is a risk of holding equities positions overnight. The bulls are getting whacked. 130.